Welcome back, everybody. Apple just released earnings, and the news since has been pretty interesting. Starting with Apple announcing a record $110 billion authorized share buyback program, as well as Warren Buffett announcing that Berkshire sold 13% of their Apple stake during the quarter. So, what's going on there? Also, Amazon announced earnings last week, and while in general I thought it was a great quarter, it maybe wasn't the explosive earnings report that some people expected. So in this video, we're going to dive into both Apple and Amazon's earnings reports, talk about Warren Buffett selling Apple and what it actually means, and break down why Amazon still has significant room to grow. So let's go ahead and get started. Now, Apple announced earnings on Thursday after the market closed, and here's what they announced. Apple actually beat on the top and bottom lines, although some thought the estimates were a pretty low bar. But let's take a look at it. So revenue was at $90.8 billion for the quarter, down 4% year over year. Their diluted earnings per share of $1.53 was at about flat to a 1% gain from $1.52 the year before. They had an all-time record in services revenue of $23.8 billion, which was a 14% increase from the year before. They had a new all-time high for active install base, and then again, the $110 billion share buyback program, plus a dividend raise of 4%, which was actually just about an extra 4 cents per year per share, so not very much. So in terms of the market reaction, Apple ended Friday up almost 6%, so it was a nice little bump up from where it had been. But the news of Buffett selling part of his stake didn't actually come out until Saturday, so we're not sure exactly what that's going to do to the stock price on Monday. Now, by the time you guys watch this video, you'll know, but as I'm recording it, it hasn't happened yet. But let's actually dig into what's happening at Apple, because the story at Apple overall, in my opinion, is actually a pretty good one. Yes, total revenue is down, and everyone will be like, why are you paying 28 PE for a company with declining revenues? And while I think that's a fair point, I also think it's important to take a look at the trends. Because revenue, believe it or not, seems to be within its normal cycle. They have big years of iPhone sales, followed by lower years of iPhone sales, as people that just bought their phones wait another 2, 3, or 4 years to buy another one. And then as they refresh, they have big sales again. And I expect that cycle may be lengthening a bit as phones get better and a little more expensive. But I do expect over the next year or two that part of that revenue is going to come back to having pretty good growth. But what Apple's been doing is slowly and methodically building up their services business. iCloud, Apple Music, Apple TV Plus, Apple Fitness, and of course, the Apple One bundle. And that gives them a more predictable and consistent revenue stream that isn't as volatile or seasonal. And you can see that in these charts. iPhone sales go up and down with the normal refresh cycle, as well as seasonal cycles for things like the holidays or whenever new iPhones are released in September. But if you look at services, it's just steady and consistently going up over time. And over the past 5 years, Apple has grown it from being about 14% of total revenue in 2018 to 22.2% of total revenue at the end of 2023. And now in Q2 2024, it's 26% of revenue. And as that service revenue grows, their profit margins grow as well. And you can see that on their 10-year trend. So that's a really good story in terms of shifting the revenue mix to be a more predictable, higher margin model. And that's part of the reason why people love Microsoft so much, because they have so much of their revenue that's subscription businesses to enterprises that it gives them that consistent kind of steady revenue that's not as volatile over time. And that's an area where Apple is definitely improving. So if we look at what I'm monitoring for Apple, revenue growth is down overall, but services are improving, and we seem to still be in the normal revenue cycle, so we'll just have to see. The install base continues to grow, and in terms of international market share, a lot of times I look at shipments, which is fine, but for me personally, I like looking at iOS total market share, which seems to be hovering around 22 to 24% in China, around 25 to 30% globally, and then at a new all-time high of over 60% in the US. So while market share in China is definitely under pressure, they're still doing relatively well overall. And in my opinion, I think a very realistic scenario for Apple over the next couple of years is that they execute this $110 billion buyback to keep the share price respectable over the next year or so. Then they continue building up those services revenues. They continue building up whatever the next AI-related features are going to be for the next-gen iPhones. And then when you get to end of this year or even next year, you'll be back to higher iPhone revenues. You'll be at all-time high services revenues, and you would have reduced another 3 to 4% of the shares outstanding. And then likely that means that Apple's stock is taking a big step up in terms of price. And that to me is not out of the realm of possibility here, and it seems to be kind of the pattern that Apple goes through for the last few cycles anyway. Okay, so what about Warren Buffett? Because by the time you watch this video, we're going to know how big of an impact the news of Buffett selling a portion of his Apple stake will have had on the market. But Warren Buffett and Berkshire sold about 13% of their Apple stake over the past quarter. And even with that sale, Apple is far and away Berkshire's largest stock holding. And when asked about it, Warren said a couple different things. So one, he talked about how they look at stocks as businesses, which should come as no surprise. And he still praised Apple, saying it's an even better business than long-term Berkshire holdings like American Express or Coca-Cola. So if that's the case, then why is he selling? Now, Warren hinted at it being at least partially a tax move, where they're going to have a 21% tax rate this year, which is likely to be much higher in later years. And personally, I'm guessing the fact that Apple was already over 50% of his portfolio, as well as, just being honest, right? Apple does have some growth concerns that are legitimate. And so if you have a holding that has that many capital gains, it's over 50% of your portfolio, and you have an attractive tax rate this year compared to what you expect going forward, then maybe that's a logical place to trim. Because obviously, if Apple was still growing like gangbusters, it's probably not the area that they would decide to trim. But still, I wouldn't take this as Warren or Berkshire thinking that something's actually wrong with Apple over the long term. He basically came out and said that explicitly. So overall, Apple is kind of doing what I expect. I know it's a very popular stock to trash because everyone says it's overvalued and why'd you buy it so high? But when you look at the story and what I'm monitoring, they're pretty much on track. We'll just have to see how their revenues and the iPhone refresh cycle plays out, as well as if they can keep on increasing that services revenue, as well as whatever new AI features they're going to be announcing in their iPad and developer events coming up soon. Okay, let's go ahead and move on to Amazon. But they announced earnings per share of 98 cents a share and a revenue beat of $143.3 billion. Now, if we look at their earnings release, you can see that net sales were up 13%. Operating income was $15.3 billion, up from just $4.8 billion a year ago. That is just massive growth. And then earnings per share was up over 3x from a year ago at 98 cents per share versus just 31 cents per share. But even with all that, the market reaction was pretty modest, at least for that first day, with Amazon ending up about 2.5% on Wednesday at $183.88 a share. But that momentum kind of continued throughout the rest of the week, with the stock ending the week up another 1.3% to close. But let's dig into some of the details for Amazon and see what's there. The overall profitability story is really a great one for Amazon, and it continued in this last quarter. North America, which is retail, had sales up 12%, with operating income up 450%. Just ridiculous improvement in profitability. International net sales were up 10%, with operating income positive for the first time. Again, profitability story is great. And then AWS net sales were up 17%, which is great growth, with operating income up 84%. Again, growing profitability. And this is really what excites me about Amazon. They're so large already, but their business segments are growing at double-digit rates, and their profitability is growing at explosive rates. And part of that is the investments that they've made over the last few years to become more efficient. But the other part is that their higher margin revenue streams like AWS, third-party sellers, advertising, and subscriptions are growing at some of their faster rates. AWS up 17%. Third-party sellers up 16%, advertising up 24.3%, and subscriptions up 11%. So really all good numbers, and while I expected an even bigger boost to ads because of the inclusion in ads in Prime Video, they mentioned in the conference call that it's something they're just getting started with and they expect to do well. So if we look at what I'm monitoring for Amazon, their revenue growth is great, their growth of higher margin segments is excellent, their CapEx and stock-based compensation versus cash flow. We didn't really talk about that, but free cash flow was up a net $53 billion from last year, which is just insane. And they did mention that they plan to ramp up spend for infrastructure related to AI, which ironically, at least a portion of that money will go to one of my other stocks in my portfolio, NVIDIA, which was a common theme among the big tech earning calls this past couple weeks. In terms of margin expansion in the retail segment, again, that has been excellent. And then any updates to regulatory issues, at least for right now, there's nothing new. So overall, Amazon is just crushing it. And I've been talking about how they're one of my highest conviction holdings, along with NVIDIA, who doesn't report earnings until another couple weeks. But Amazon, to me, from a long-term growth outlook perspective, is just a no-brainer. Right now, they're just a freight train. And just real quick, I want to show you one thing that I actually love about Amazon. They make it really easy to follow their guidance and see how they're executing. Because if we go back to Q3 2023, they had guidance for Q4 2023 of net sales of $160 to $167 billion and operating income between $7 billion and $11 billion. In Q4, they actually had net sales of $170 billion, outpacing their guidance, and operating income of $13.2 billion, again, outpacing their guidance. And then they gave guidance for Q1 of net sales of $138 billion to $143.5 billion, with operating income between $8 and $12 billion. And then now in Q1, they just had net sales of $143.3 billion at the top of their guidance range and operating income of $15.3 billion, again, easily beating their own guidance. And then they just gave guidance for next quarter of net sales of $144 billion to $149 billion and operating income between $10 and $14 billion. So when you put their revenue and profitability trends together along with their recent performance against their own guidance, you can see why I keep talking about them so much. Because Amazon is just a beast and their business continues to get stronger, which is why I bought it in January, even after their big run-up in 2023. So what do you guys think about Apple or Amazon's earnings reports? Did anything stand out to you? Let me know down in the comments below. Now, if you want to watch my outlook on Apple for the long term, and if I think their era of dominance is actually over, click on this video right here. Hope you guys have a great day out there. Financial independence is true freedom, so keep building and stacking wins, and I'll see you on the next one. Peace.